What's up guys, welcome back to InvestingPH. For this video, I'll show you 4 dividend stocks that I'm investing in right now. For my first company, it's Globe Telecom. Now I've been buying Globe non-stop for the past 2 months ever since its stock price fell below 1,900 and it's now my largest holding so far. Now Globe has a diverse set of businesses, from their mobile business which accounts for the majority of their revenue down to their non-telco businesses such as EasyPay, GCash which is under Mint, and a lot more. Not only does this company dominate in the mobile business, but also in the e-wallet app, which has over 76 million registered users as of the end of 2022, which is 5 times bigger than its rival PayMaya. As for the revenue, it has grown consistently over the years, having a 10-year compounded growth rate of 7.30%, and in their net income, having a larger growth in 2022 with a whopping 46.13% growth. This gives it a 10-year compounded growth of 17.58%. And for their equity, they had been consistent as well. They grew by 33.38% in 2022, which is a huge jump, giving a 10-year compounded growth of 12.78%. As to how well they are handling their debt to equity is 2.65. Although it falls in the category proceed with caution, with how well Globe is growing their earnings, this doesn't affect my decision to invest in this company. And if we compare to other telecommunications company, like PLDT has a ratio of 4.03 and DITO has negative earnings, so for the 3, this has the best ratio for its industry. Now for its dividends, Globe has a dividend yield of 5.8% and they have grown their dividends ever since 2013. And for its payout ratio, they only pay 43% of their earnings to their shareholder, which means they still have more of their earnings left to grow the business. For its price valuation, P/E ratio is only 7.5 compared to its peers. PLDT has a ratio of 25.6 and DITO, since it has negative earnings, does not have a P/E ratio. Converge 12.1. So for this ratio, Globe is the lowest price in relation to its earnings. For its price to book, Globe also is the lowest price compared to its book value, only trading 1.6 times book value compared to PLDT 2.5, Converge 2.5 as well, and DITO also has negative equity, so it has no price to book ratio. Lastly, for my buy below price, my computed intrinsic value for Globe is 3,434.92. With a 30% margin of safety, my buy below price is 2,404.4. Now before we head on to our next company, if you're wondering where I got the ratios and the graph comparison I'm showing, it's from Simply Wall Street. They have tons of data available for you and it's so easy to understand. So if you're a beginner investor, this platform would definitely help you out. And for those who are having trouble keeping up with the stocks they own, then this platform also does the job for you. They update you on the stocks in your watch list from earnings release, dividends, insider buying or selling, and if the company falls below your computed buy price. And speaking of buy price, if you don't know how to compute it, they also have a computation for you. But of course, a warning, still do your research about a company if it's really worth investing in or not. Don't just rely on the buy price alone. And there's more. They also have a portfolio tracker that lets you assess your portfolio's health, detailed returns, and a lot more. So if you want to try it out, you can head down below and sign up using my link. They offer their basic plan for free, and if you do avail their paid plan using my link, you can get 30 and even up to 40% discount. So what are you waiting for? Level up your investing journey with Simply Wall Street. Now back to the video. The next company is FGen. Its price has gone down as well, from its highest in 2021 of more than 32 pesos, now sitting at 16 pesos per share. Now, FGen is one of the largest power companies in the Philippines. They generate 3,495 megawatts of electricity distributed in different parts of the Philippines, 2,437 in Luzon, 955.8 megawatts in Visayas, and 108.6 in Mindanao. This in total is 12.3% of the total capacity of the Philippines. For their financials, revenue, although has its ups and downs over the years, overall, for the past 10 years, they have an average compounded rate of 3.42%, and in their net income, although still lower than their 2019 earnings, they still boast an 8.27% 10-year compounded return. As for their equity, they have grown consistently ever since 2013 with a 10-year compounded growth of 8.70%. For how well they're handling their debt to equity is only 0.82. This means they only have 0.82 pesos of debt for every 1 peso of equity, which is really good. This means they're managing their debts well. And for their dividends, they have a dividend yield of 5% and they only pay 22% of their earnings, which means they still have a lot of their earnings left to finance their company's growth. As for its price valuation, P/E ratio is only trading 4 times its earnings. When compared to other power companies, they have the lowest ratio. And for price to book, the same as well, so undervalued, only trading 0.4 times its book value. If we compare it to its peers, it is the cheapest. So if we buy today, we are buying its book value at a huge discount. Lastly, for my buy price, my computed intrinsic value is 24.75. With a 30% margin of safety, my buy below price is 17.3. Third company for today is Shang Properties. Its stock price has dropped significantly over the past 5 years. Although this is the lowest market cap of the 4 companies today, its dividends is a good one. Its business range from residential, malls, offices, property management, and hospitality. For their financials, like all property businesses, its financials were deeply affected by the pandemic. Revenue, although has recovered quite well from 2021, it's still nowhere near pre-pandemic level, but their 10-year compounded growth is at 5.50%. Their net income, on the other hand, has surpassed their pre-pandemic level, jumped by more than 71.11%, which is their all-time high. This makes their 10-year compounded growth to 8.24%. The growth came from their condominium sales, rentals, and hotel operations of Shangri-La Fort. As for their equity, they have grown consistently as well, and in 2022 had a massive 23.13% growth. With this, their 10-year compounded growth is 8.55%. And as to how well they're handling their debts, their debt to equity is only 0.47, which is very low. Shang is really handling their debts well. For their dividends, their dividend yield is 11.7%. Now it's this high because they raised their dividends in their first payout this year. Now even though their yield is high, their payout ratio is only 33%, so they still have more earnings left to expand their business. And for their price valuation, price to earnings is only 3.5, which is the lowest in comparison to other property companies. Price to book is also at a very low 0.3, which means we can buy their equity at a very huge discount, although almost all property companies are still trading at a discount. For my buy price, my computed intrinsic value for Shang is 3.69, and with a 30% margin of safety, my buy below price is 2.58. The last company for today is TDMPR, the REIT arm of Double Dragon. Under the REIT are Double Dragon Plaza, Center East, Center West, Ascot DD Meridian Park, and Double Dragon Tower. Now there's not much to say about REITs since we invest in it more for the sake of dividends. They are obliged to pay 90% of their income to their shareholders, so the more they earn, the higher the dividends we investors get. For their earnings, so far they've grown a lot this 2022, having a 68.72% growth, and for their equity, they are also consistently growing every year. And as to how well they're using their equity to produce net profits, their ROE stands at 23.7%, which is beyond its industry average of only 5.7%. And if we look at their financial health, their assets far exceeds their liabilities, which for me, if their debts are well handled, the more chance they would continue to grow more in the future and pay me dividends consistently. As for their dividends, their current yield is 7.8%, and they have increased it slightly over the years. And for my computed buy price, my computed intrinsic value is 2.4. With a 30% margin of safety, my buy price is 1.68. So with that, this ends this video for today. Now if you're new to my channel and want to learn more about investing, go watch my other videos as well. It would really help you out. And before you leave, do click the like button first. It really helps out the channel. With that, thank you and see you in the next video.